Hello traders, welcome back to the channel. This is Vishal and let's start today's weekly sectoral analysis. Now my friends, today's video is going to be extremely important and why is it important? First let me share with you that, and once I complete sharing that, then I'll start the analysis. If you check all over the social media, Twitter, WhatsApp, I think everywhere in every group which is regarding a financial market or a stock market group, you will see negative news all over the world, right? That there is a recession in the US, there is problems going in Europe, and recently something else happened even in Russia-Ukraine war. And in between all of this, how are the Indian markets performing? That is what we need to understand, because we need to keep ourselves sane. When a lot of negative news comes up or a lot of positive news comes up, is the charts telling you the same thing? Are Indian market charts telling you the same thing? Because let me remind you that we are trading and investing in the Indian markets, not the US markets. I do agree that US markets में जो भी होगा उसका असर Indian markets में होगा, but ultimately we are going to press the button and we are going to buy or sell the stock which is in the Indian markets. And there have been instances in the past where Indian markets have took another path and they have diverted the way they have diverted themselves, the way they move in comparison to the US markets. Now, generally, I don't talk about US markets in weekly sectoral analysis, but what I'll try to do is I'll just open the chart of Dow Jones. See, this is the chart of Dow Jones. How does it look to you? I don't want to talk anything. You can just have a look and you will understand. Is it looking bad? Is it looking good? And now I'll immediately open the chart of Nifty futures. And this is the weekly time frame, by the way. Is it looking different to you? Right? If you are a person who knows even little bit of technical analysis, basics, you will understand something is different in the Indian markets. Now, how will it go ahead? That is what I'll be sharing with you today. So to understand this completely, I would request you to watch the video till the last. Only then you will be able to understand exactly what is happening in the markets right now. All right. So let's start today's video with any further delay. Now, my friends, on the right-hand side, I will be analyzing the monthly and the weekly time frame charts, which are the higher time frame charts. And on the left-hand side, I have the daily time frame charts. So if you check, this is the Nifty futures monthly time frame chart. I believe everything seems to be fine. Trend is up. Yes, there is one particular candle over here, which is a shooting star. But we need to understand that after the shooting star, still as of now, this particular candle hasn't closed. If this candle, converts itself into a big red candle, then yes, it could be a problematic thing. But so far, I think it is just, tested this high of the previous candle, which is also shooting star, which was made in April 2022. And that is why you can see some selling coming up in the monthly time frame chart. Now let's go to the weekly time frame chart. In the weekly time frame chart, you can see the markets first rallied very fast from the month of June. I think in the ending of the June, the rally started, I believe. And in a matter of 2.5 months, it was a extremely good rally. And somewhere over here, I think even for Bank Nifty and overall markets, I had shared my view that markets are pretty much overstretched and they need to slow down. And then we saw a decent correction in the Nifty futures, even in the Bank Nifty futures. And in the last 2 weeks, you have seen a sudden bounce back. Now, if you check, this bounce back has happened on two different things. One, this bounce back has occurred because we tested the 50% Fibonacci retracement of this entire rally. Plus, you can see this small candle. This also gave us support to this base. And what we have over here is a hammer. After the hammer, this is not a classical bullish bell toll, but nevertheless, it is looking a pretty decent candle. All right, it is looking pretty decent candle. Now, in the daily time frame chart, if you have a look, the trend is completely flat. Neither it is down, neither it is up. So what we can see is there is some sort of resistance forming over here. And we also know that probably tomorrow we could have a big gap down as per the Singapore Nifty. We could have, right? But the current state of the market, the way markets are moving right now, I believe, especially in the medium term, especially in the weekly time frame charts, we are consolidating, nothing else but consolidating. We would go up and down, and we are trying to possibly just do a, you can say, a time correction rather than a price correction. And any markets that are doing time correction and one another market is doing a price correction, then the one which is doing time correction is much stronger. One thing we need to understand, if any day, just due to a collapse in the US markets, if that happens, let's hope it doesn't happen, but if it happens, and if we close below the lows of this hammer base, then yes, things will change. My view will also change, because ultimately price is God, and whatever view I derive is not my own thought process. It's the chart which is telling me what to do and what not to do. So if we close below this, then yes, things will change drastically. But as of now, it is not that case. So it looks okay, it looks fine, but we are consolidating. As a swing trader, as a positional trader, you will have to trade as minimalistic as possible. I would say that if you have 4-5 trades, pick only one. Try to see that which particular trade will give you the maximum return with minimum risk, which particular sector is looking powerful, or if even if you're trading currently, you can reduce your position sizing down by 50%. The reason is we are just chopping up and down, up and down. If you just check hourly time frame charts, generally I do not open hourly time frame charts and weekly sectoral analysis, but if you see a big rally suddenly, a gap down, after a gap down, people would expect follow through selling, but then we have a follow through, we have a gap up, and then after a gap up, we have a second gap up. People who are bullish traders would expect that market should go ahead, but rather than that, market comes down. After the market coming down, market started going up, and now again we have a gap down. So we are just consolidating, and generally at a time when markets are consolidating, it is not the best of the times to be brave in the markets and trade a lot of to initiate a lot of trades. I would suggest bring down your position sizing, and probably if we do not break these lows, we may consolidate probably a week, maybe 3 weeks, even more. Maybe after a couple of weeks or 3 weeks, when things change, we'll have to revisit the chart that point of time. And in between, obviously, I'll keep updating all of you guys with my Nifty short-term view videos in intra-week. And that obviously at the weekend, I'll be coming out with my weekly sectoral analysis. So I'll keep updating you if something attractive, occurs in the chart. But as of now, we are just consolidating. So stay put, trade less, take a breather, and basically try avoiding a lot of news, because if you try to look at news which is coming up in the social media and on the charts, something else is happening, you will not be able to focus and you will not be able to take timely decisions. All right. Let's have a look at the Bank Nifty. Now, according to me, Bank Nifty is looking much stronger than Nifty futures. And the reason for that is Nifty futures have retraced almost 50%, and Bank Nifty futures have retraced only 38%. And index or a stock that retraces less is more powerful. Now, is that formed a base or something? No, I think it is still consolidating in the medium term. In the weekly time frame charts, we do have a hammer. The second candle, I believe, is a sort of, you can say, a high wave candle. It is not exactly a high wave candle, but it looks like one. And generally, high wave candles, forming at a support, it is a sign that things are overstretched in a particular direction. Then the previous direction was actually down. We came from up to down. So this is a sign that markets are overstretched on the downside in the medium term or in the short term. But I believe they're not still ready to, go again and, just keep rallying. If they do, I'll be very surprised, to be very frank with all of you guys. I'll be very, very surprised. But I believe they will consolidate more. In fact, Bank Nifty needs more consolidation than Nifty futures. It is stronger than Nifty, but it would require more consolidation. That's what I believe. And in the daily time frame charts, the trend is completely flat. Neither it is up, neither it is down, and that's it, I believe. And if I look at the private banking and the PSU banking charts, in both of them, I believe PSU banking is slightly stronger. And if you check the private banking charts, you'll see one thing, it has broken previous low. But if you check the same thing in the PSU banking chart, things are different. What has happened over here is the PSU banks have not broken the previous low. So this is the reason PSU banks are slightly more stronger. According to me, as per current market conditions in the private banking pack, there is one stock which is looking powerful than all other stocks is IndusInd Bank. It is looking better than all other stocks. I think I did share about this stock in my previous Nifty short-term view video also. And in the PSU banking pack, I believe Bank of Baroda is the stock which is trying to come out of the consolidation and trying to give a breakout. So in case if Bank Nifty starts performing, these are the two stocks which you can concentrate on. In private banking pack, it's IndusInd Bank, and in PSU banks, it is Bank of Baroda. All right. Middle pack. Now, middle pack is sector which is looking very strange right now. Strange in the sense, why I'm saying strange, I'll come to that point. First, let's have a look at the weekly time frame chart. In the weekly time frame chart, we have back-to-back hammers, which is shouting very clearly that there is some sort of buying coming up in this zone. There is surely some buying coming up in the zone. But in the daily time frame chart, if you check, then we have broken the previous low. Now, this is the reason why it is looking strange. And I believe at such a time when you are confused what should be done, you should always see that do we have some resistance on the upside or not? And I guess we do have, and that's this particular gap. So once we close above this gap and we keep rallying day after day, I think slowly and steadily the strength will build. And there is one more reason, because in all of the metal pack stocks, could be Hindalco, Jindal Steel and Power, JSW Steel, there is only one stock as of now which I like and which is looking extremely powerful, and that's Jindal Steel and Power. So I believe in a sector where there are few stocks, at least when 2 to 3 stocks, minimum 2 to 3 stocks start looking extremely attractive for the long side, only then I would suggest that one should be, going for the view that this particular sector might outperform. Now, in that doing so, you might miss purchasing a stock at a lower levels, but that is absolutely fine. As we are trend followers, we would buy high and sell higher. So as of now, according to me, this is the stock Jindal Steel and Power which could outperform in the short to medium term. But with time, I think maybe with time going ahead with days or weeks, we might see other stocks also popping out of their consolidation levels. All right. Autopack. Now, Autopack is one of the strong sectors, and this was one of the sectors instrumental in the entire bottoming out of the Indian equity indices from June to possibly in the month of September when it made a top. In fact, Autopack started rallying much earlier. I believe, if I'm not wrong, it could be March. Yes, you can see it was ending of March. So you can see Autopack is one of the, you can say, outperforming indexes in the entire sectoral indices list. But as of now, if you see, in terms of trend, in terms of state of trend, the weekly time frame charts are clearly stating that it is consolidating. The trend is completely sideways, and even in the daily time frame charts, the trend is completely sideways. So as of now, I think one should not be extremely overweight on Autopack right now. Wait maybe for few days, maybe 1 or 2 weeks, and if you see in between a sudden spike comes up, then I think one should start concentrating on the Autopack. As of now, even I'm not doing anything over here, but I would wait and watch, and I would wait for the price itself to give me confirmation. One bright spot which I can see over here, that it is getting support from these previous highs, and in the daily chart it is taking support from this 127.2% Fibonacci extension. So this is a good sign, but some sort of positive move, if it does show in coming days or weeks, then I think I'll get more interested in this particular sector. All right. And I'll keep updating you guys when that thing happens. Now, IT pack is one sector which I have nothing to comment on because the trend is down in the weekly time frame chart. The trend is flat in the daily time frame chart. Now, if a sell-off starts in the daily time frame charts on the downside, it could happen that you would probably go short in the short term in IT packs at a support band, and you can see what has happened multiple times whenever IT pack has hit the support band. So I think as of now, I have nothing to say for this sector. I would wait and watch. And whenever I find something attractive, maybe on the short side or on the long side, I'll share with you people. Finance pack. Finance pack, weekly time frame charts looking extremely attractive, looking extremely strong. One-way rally, sudden drop, and there is a big trend line breakout. And after this trend line breakout, you can see that the prices have come down to retest this support zone. And the good thing is that the wicks have been below the trend line, and you can see the closing of this particular week, the previous week, didn't happen below this particular trend line. It is respecting the support of the trend line. That is one thing. Now, what is happening in the weekly time frame chart and in the daily time frame chart is the trend is flat in the weekly time frame chart, even in the daily time frame chart. But if you see, they're getting support from the trend line and from the Fibonacci extension. So again, I think just like Nifty futures, we'll have to wait for a few days to maybe a week or 2 weeks to see that whether we see some sort of upside from here or not. If that starts happening, I think one should surely look into the finance pack. This could turn out to be one of the very good aspect for swing trading opportunities. All right, but you'll have to wait. Don't just jump immediately. All right, Pharma pack. Pharma pack, I'll just come to the point straight away. I just like two stocks over here. First thing is, Pharma is in an uptrend in the daily time frame chart. In the weekly time frame chart, you can see a trend is starting to come up, but some sort of profit booking is visible, and it could consolidate. Maybe short-term profit booking could be, could happen probably in the short term. But one stock is Cipla, which is looking pretty good, and the another one is Sun Pharma, and these were both of the same stocks which I had shared even the last time. I think any sort of short-term correction, any sort of short-term dip could be used as an opportunity for swing traders to initiate long trades in these two stocks. All right. FMCG pack. Now, FMCG pack is again one of the stronger sectoral indices which started the rally probably even more earlier than any other sector. Auto pack and I think FMCG both started, if I'm not wrong, at the same point of time. Currently in the weekly time frame chart, if you see the type of rally which was going on from June to, you can say, at least July, these 2 months. So the momentum has come down. The momentum has come down. The trend is still up. The momentum has come down. One stock which I had shared even in my Twitter handle is ITC. Now, as a positional trader, there is no point buying the stock at this particular juncture. But as a swing trader, I believe it is getting ready for a short-term swing trade, maybe for a day for 1 week to 2 weeks. But again, as a trader, you will need to time this trade properly from the shorter term time frame charts, not from the daily charts. So you can use this particular stock, use your own analysis, your own levels. But I'm just sharing this particular stock with you. It's looking good in entire FMCG pack, and it's looking good for a swing trade. Realty pack. Now, Realty Pack was one of my favorite sectors as it was looking extremely attractive when the sector was at higher levels. Now, Nifty, Bank Nifty, I think probably all the sectoral indices have come down when the profit booking happened. But uh, one thing which I didn't like in Realty Pack was the amount of profit booking which should have happened, because when you have a positive view on a particular sector, and when market comes down, even that particular sector will come down. But if that sector is strong, it will come down less. It will come down less. Like I told you that Bank Nifty has retraced less in comparison to Nifty. So in that context, I believe Realty Pack has, I believe, retraced much more than it should have. Now, you can see a hammer, you can see one another sort of hammer, but the trend is down in the weekly time frame chart. The trend is flat in the daily time frame chart. So as of now, I have nothing to comment over here. I'll wait and watch. And once I develop some sort of view in this particular sector or any stock related to this sector, I'll share with you. All right, because there makes no sense to trade just blindly, just because there are two positive candles and you'll go start buying this sector. It doesn't make any sense to me. Consumption pack. Consumption pack is again one sector which is very strange in terms of state of trend. The reason for that is if you look at the weekly time frame chart, I would like to convert this and we can see a clear cut higher high in the price, lower high in the RSI. So we do have a negative divergence, but I believe in the daily chart, the consumption sector is looking ready for a decent swing trade on the upside, but only on the breakout. And I'm saying it looks a good candidate or looks good for a swing trade. It doesn't mean that you should buy the stocks right now. You'll have to first find out which stock you should go for from the consumption sector, because there are many stocks in the consumption pack. And one more thing, you need to buy that stock from the shorter term time frame charts in a breakout fashion. You cannot just buy when the stock is down or it's consolidating, because what if this was the start of a correction and you just buy over here and the stock keeps going down? No, you should wait, and when a breakout happens on the upside in the shorter term time frame charts, then the price itself will confirm that I'm trying to go higher. Then you can take a trade from that stock, keeping a stop loss target and whatever. All right. So this is one sector which where I would like to avoid taking new positional trades. But yes, as a swing trading opportunity, I would like to scan and find good stocks from the sector. Mid cap index, surprisingly, I think as of now is looking very, very strong in the weekly time frame charts. But again, in the daily time frame charts, since it has broken this previous low, there are a few question marks over here also. So I think a little bit more strength once it starts moving higher above 31,950 or something closes above it, then we'll have more confidence in the mid cap index. All right. Now, again, to sum up this entire educational video, number one is, I think, in the entire social media, everywhere negative news is flowing. But we need to understand that we are trading the Indian equity markets, not the US markets. Yes, if US markets will collapse, even we will come down. I do not deny that. But we need to, rather than assuming things, assuming, rather than assuming that mandi aayegi, 16,000 का index आएगा, 15,000 आएगा, rather than going into all these stupid things, we need to understand as of now what is happening. We are currently at 17,328.85 to be precise in Nifty futures. We might open gap down tomorrow by 200 to 233 points, and that is completely all right, because I am talking about a medium term horizon, not a short term horizon right now. All right. So as a swing trader, as a positional trader, trade as less as possible in coming few days or maybe even couple of weeks. We will have some, because markets are not going to remain over here forever. They will change, but let them change first. Let them take a direction. Until and unless you're just going to keep chopping between, few hundred points in Nifty futures, you're not going to make money, because ultimately Nifty, Bank Nifty, all these important sectoral indices need to move in a particular direction. We are not moving anywhere. We're just going up and down. As an intraday trader, it's a different thing. But as a swing and a positional trader, you need to take a breathe. You need to take a breather. You need to wait for a better opportunity, whether it is on the short side, whether it is on the long side. All right. So trade less and trade wisely. Thank you.